Welcome to the Stock Invest channel, your go-to source for all the latest market insights. As we gear up for the markets to open, European stocks are moving cautiously ahead of the European Central Bank meeting, with a rate cut widely anticipated. The DAX index in Germany has risen by 0.4%, while France's CAC 40 and the United Kingdom's FTSE 100 have seen slight declines. Meanwhile, the Pan-Europe Stoxx 600 index has dipped by 0.3%. Investors are keeping a close eye on the European Central Bank, which is expected to cut interest rates for the seventh time in a year. Analysts at ING believe that markets have already priced in this move. Despite the expected rate cut, there is little hope for clear guidance from the European Central Bank due to uncertainty around tariffs and their economic impact. This leaves both markets and policymakers in a state of confusion. Adding to the economic mix, German producer prices have fallen, indicating weak inflationary pressures in Europe's largest economy. Eurozone inflation remains modest at 2.2% annually. On the international front, tariff negotiations between Japan and the United States are in progress. President Trump has reported big progress as Japan becomes the first major trading partner to negotiate directly with the United States. The European Union, although critical of the United States tariffs, is open to negotiations. European Union President Ursula von der Leyen has expressed a willingness to explore diplomatic solutions. In corporate news, Pernod Ricard has reported a 3% drop in third-quarter sales, missing forecasts amid tariff uncertainties affecting the spirits sector. Hermes, however, reported a 7% rise in first-quarter sales, though it slightly fell short of expectations. This marks a rare moment of weakness for the luxury fashion giant. ABB has seen a 22% increase in profit, buoyed by higher orders and strategic restructuring plans, including the spin-off of its robotics division next year. J. Sainsbury posted a 7.2% rise in annual profit, but its growth forecast for the coming year remains modest due to rising costs and increased competition. On the tech front, Taiwan Semiconductor Manufacturing reported a 60% surge in net income, driven by strong demand for advanced chips. In the energy sector, oil prices are on track for weekly gains. Brent futures have risen to $66.21 a barrel, while United States West Texas Intermediate crude futures have climbed to $62.92 a barrel. These increases come as the United States imposes new sanctions on Iran's oil exports, targeting Chinese entities and causing supply disruption concerns. Additionally, United States gasoline and distillate stock draws, alongside a smaller-than-expected crude inventory gain, have bolstered the oil markets. As the week wraps up ahead of the Easter holidays, both Brent and WTI benchmarks are set for their first weekly rise in 3 weeks. Don't forget to subscribe to the Stock Invest channel and hit that notification bell so you never miss an update. Thanks for watching, and we will see you next time.